My guest today is one of my best friends in the universe. This is Sean McCluskey, who I've known for a really long time.
Long time.
Mainly from the mortgage industry, but we really have developed our friendship over the last, 10 years?
We traveled together.
Yeah. Done a lot of golfing together, had a lot of fun together, and it's interesting to me. I know a lot of people, but I don't know anybody quite like you, and you're very unique in the way that you kind of tackle problems and go after stuff. And so I want to dive in today and talk about your experience and the things that you've dealt with in, a lot of mortgage-centered stuff where you've been through a lot of the mortgage industry. You technically retired from the mortgage industry. How long did that last?
A year.
1 year. And now you're stepping back into the mortgage industry. Why do you think people can't retire?
I can't speak. I can't speak for other people, but for me, I need the energy. I need the interaction. It's interesting. It was about last October, so I'd been out since April 15th, and a friend of mine who you did a podcast with actually was running a weekly meeting called Coffee for Closers, and I said, buddy, I don't need to say anything, but I still want to be part of a community. I want to hear people, what motivates them, and just watch leadership. Could I participate in your meeting for a while? And so I found myself just attracted to I miss people. Mm-hmm. And so for me, it doesn't matter what the widget is. It just turns out that mortgage became my thing. Mm-hmm. But the people piece of it is so important for me, that connection.
Yeah. All right, take us back to your entrance into mortgage. Let's start there and go through some of the things that you dealt with in growing a company, selling a company, going back in. So start us from your entrance into mortgage. What was your experience back then?
Man, I don't love that story. So I thought we were going to stay away from that. But so it's 1998, and I had been in the securities business for 8 years. I had a disagreement with my broker-dealer, and a good friend of mine, who was one of my best clients, Tim Carlson, said, hey, just come here and hang out, and we'll I need somebody to help me with this mortgage thing. And that was at First Horizon. And we'll see what it looks like. And so it took me about 14 months to overcome the mess at the broker-dealer. And so here I had the opportunity to go back into the business. But 14 months later, First Horizon had become something real and something big. It was just on the wholesale side, but we started to offer checking accounts, and we started to offer new construction and equity lines, all things that were not traditionally wholesale. Mm-hmm. And I was part of a group that was doing $4 to $5 million a month to $50 million a month to $100 million a month. And again, I didn't take them. I was just part of an amazing team. Mm-hmm. And got to work with somebody that I think who was one of my mentors early, Tim Carlson. And
that was a time, you said 98. So if I remember 98, in the mortgage industry, you're not talking about you took them to that as the market was booming. You're talking about flat market, basic, 8%. 98 was 8%, 7% interest rates, right? So this isn't like it went from 7 to 2% and you took them there, right? This is actual hard work and...
Well, I didn't. So I want to be clear. I didn't do it. I was just part of a great team. Yeah. And the advent of we were just starting. The fax machines, how fax machines were working back then. AUS really wasn't a thing. It was just becoming part of the equation, and the acceptance of AUS. There was a lot of resistance back then. Transbox was the primary delivery point back then. It was different, not different good, not different bad, just different. But it was team, it was community. And that's always what attracts me, is team and community.
Yeah. It's funny when you say Transbox. I can remember the Transbox guy picking up our Transboxes every day and looking out and seeing his pickup truck with his camper shell. And I'm like, is that secure? The dude was not to judge or anything, but I'm looking at him going, he had his Walkman headphones on and but so old times, you start going, everything is going well, things are growing, you're enjoying it, you're loving the team concept. At what point did you transition into your own thing?
So we had a phenomenal success, and I think that was probably just mirroring who Tim Carlson was at the time, and we added some great people along the way. But we worked for a bank, and the bank's objective was deposit accounts, not mortgage. Mortgage was just an afterthought. They tried to create a financial center concept. It just didn't take traction. It was hard for a Southeastern bank to be able to do that on the West Coast. The idea, and wholesale also was, it wasn't, the concept of it wasn't relational. It was, you have a place to send your deal. If you send it to us, we'll get it done and we'll deliver the product. We tried to bring relational lending to that. So it was more than just, we can process your mortgage. Which is why I got involved with Building Champions. There weren't any wholesale participants back then. And originally the reason I started to go to Building Champions was, what are you telling your best of the best originators? How are you helping them become better? If I could waterfall that into our account executives and they could go out and then be a difference maker for loan officers, the broker loan officer, then all of a sudden we matter. It's not just what file do you have for us to look at, but how can we help you be a better loan officer, which helps your realtor be a better realtor. Mm-hmm. And the bank, ultimately, that wasn't their priority. And so there were three of us, Brian Carlson, Tim Carlson, and myself, and then two others, Brian Ashby and Melanie Richards. And we thought, what if we could create a different experience? What if we could create an experience that people were attracted to, and we weren't just a choice, or we weren't just one of calls, but we were the first call? Because if I didn't do the product, or I didn't know how to do the product, I knew somebody that could or would, and then all of a sudden you called me and I became a resource, mm-hmm. which means many times I got the deal. That was the birth of Hyperion. So started in 2003 and we opened doors in 2004.
And that straight wholesale lending?
Straight wholesale.
Just what you knew, stayed in what you knew, but you built your own thing. And then how fast did you grow from 5?
So we topped out at about 146. We thought 5 could grow to 10. We might do $15 million a month and it would be great. We missed that. We missed that mark by about $150 million a month. And so, but again, it was that that law of attraction. We just didn't have wholesale where you could send your business to. We created a tier of relationship. If how could we community great minds? How could we put other brokers with other brokers and be able to do it with abundance, as opposed to being concerned they could share their ideas and then they wouldn't have that, they wouldn't lose to that, or they wouldn't have somebody would come in with scarcity, but everybody shared those ideas. So we created a concept called Titan Roundtable, and we had people that were committed to the business and a way for them, maybe outside of their own company, to community. It was, really, we just stole from Building Champions. Sorry, Daniel, but that's where the concept came from.
So as you're doing that, now we're talking about 2003, 4, 5, 6. Like, this is a growth time for the mortgage industry. People are doing well. Did you get any resistance from your team on like, well, that's not how we should do it? Like, that's not really, I don't really want the community thing. I'm going to go do this over here.
We weren't for every broker, but we were wholesale exclusively. In regards to our other team members or employees, there wasn't any resistance. Everybody loved the idea of community, mm-hmm. and the idea that people were attracted to that, and we could grow, and there was job security. And again, I think that started from Tim. Is that Tim never asked you to do something he hadn't done himself. I meet Tim back in 1982 because he is my mom, who became a realtor's. His loan officer's processor's assistant was Tim Carlson.
No way.
So he had done everything, mm-hmm. and he taught from that place. He led from that place, and he expected expected you to, and so we did. There wasn't a job most of us hadn't done.
Mm-hmm. It then leads to 05, 06, 07. At what point does Hyperion? At what point did that shift from being Hyperion to not being Hyperion?
Well, so it's August 2006, and arguably most of the people in the world thought, at least in the United States, thought mortgage was on fire, mm-hmm. and it was amazing. And here it was, probably second week in August of 2006, and we got an EPD. We're like, oh, we got an EPD. That's early payment default. That was the first time we had seen an EPD. And we looked at what that book or what that paper was from, or the type of loans we were doing that was getting its first EPD. And because we didn't have a lot of levels to the structure, we were as close to the street. It wasn't unusual for Brian, Tim, or myself to be out. We were doing our Titan Round Table quarterly. So we got a sense of what was important. We could hear what was important. We could react to what was important. And we looked at that book of business, and we had a lot of paper committed. So some things I should probably not say. But we probably did what we ask every broker not to do, which when we looked at the millions of dollars in those loans we had, and there were 12 of us that sat in a room from really late August to the first week in January in 2007, and we sent packages of the same loan everywhere just to see who would buy, who's going to buy, who's going to buy. This is well in advance of the time that people thought the crash started. But for us, that's when the crash started. And by 2007, by January, we were out. We had every bit of every toxic piece that we knew we had was gone.
So you acted as fast as you possibly could.
We acted as fast as we possibly could. Several of the investors, many of which aren't here today, would say, hey, we'll buy that book, and for 3/8 less, you'll have no recourse. And we were thinking, this is the part I probably should leave off the video. But we would say, yeah, we'll take that deal. It was our savior, without question, because we would have, it could have been a different story for Hyperion.
Mm-hmm. How many hours are you working during that time in a regular week?
I don't know when I went home. I don't remember. It was a lot.
Yeah. Was it just like fire is going, like let's get in here and put this fire out and nothing else matters?
Well, we still had to transact other business. We still had to get business in the door, but we believed in our team. We believed in the vision. We believed in that paper because there was market acceptance for that paper. Mm-hmm. And as we started to see the first couple of loans trickle back, because we had people that were buying 3 and 4 homes with no skin in the game in any way, except for they had the right credit score. Mm-hmm. Ultimately, when we looked at it and we said, gosh, we don't feel good about loaning on that. And that was probably our indication. We probably need to exit that paper and get rid of what we had. And we did.
So did you sell the company at that point?
No.
Just folded it?
We went back to traditional Fannie, Freddie, Ginnie.
Okay.
Fannie, Freddie, Ginnie, USDA.
Okay. So kept going, just got rid of anything that you saw as more risky and more potentially long-term damage.
Well, the darkness was just beginning, and it got dark. You go through, over that period of time, and I think we were light compared to others, but 4 rounds of layoffs. Mm-hmm. We were heavy in regards to our people, and we had a great quality of work life and personal life, but it changed a little bit. We had to buckle down. We had to get back to doing the job we did, and the other 3 that we didn't, we hired somebody else to do that we needed to do now.
Mm-hmm. There's a lot of leaders going through that right now. I don't know of a mortgage company that is the same size they were just a year ago. There's a couple that have grown, but there's a lot of companies that are reducing. So when those leaders listen to this, what advice do you have based on your experience in, like, what are the big takeaways from doing that right? Because I imagine the first time you had to do that, was that the first time you had ever had to let somebody go?
That many rounds, yeah.
So how'd you manage through that? Because that's a pretty big hit.
I think the way I handled it the second time, so last year, April 15th, I actually did sunset. That was a whole lot easier this time. I didn't have to go through. That's not the way to do it. But I saw, and you could see the writing on the wall, that if you didn't start to react, if you didn't start to make your strategic changes, and it didn't start in April, it started in the fall of 21. you could started to see where the market was going, the direction of the market, and you needed to make changes. The challenge is you didn't want to cut so fast or too fast. You go back to 2019, and 2019, we reduced the hours because we didn't think it was a forever, but the market had slowed considerably. And so at the end of 2018, beginning of 2019, we asked our employee group to change their hours from 40 to 32. Didn't know how long, just needed to try to weather the storm. Well, to the degree that the leadership can take credit for any of this, and they probably shouldn't, but the market changed by the end of the first quarter in 2019, it started to change again. And by the second quarter in 2019, 40 hours was, could you do 50? Can you do 60?
Yeah.
It had changed. I think some of those same principles were applied or thought they could be applied in 2022, but their interest rates were different. The market was different. And we probably weren't going to get a repeat of COVID again because we dealt with that. So it was a different set of circumstances.
So each one has been different because, I mean, you just went through three, right? The more recent one from 2021 or 2022, the 2019 reduction in hours instead of reduction in force, and then back in that original stage when you did your initial multiple rounds of layoffs back in 2000. Would that have been 8?
2007, 2008, but probably even prior to that, from my time in the business, 2001, we saw a downturn in the market. We saw actually a regression in housing pricing. And we didn't see positive growth in house pricing. 2001 was the first time, at least in the mortgage industry, that I saw a regression, a sustained regression.
So do you get better each time as a leader?
I think you get better at seeing what's coming, but not, as you intimated, every situation, every circumstance is different. So you have to prepare. You have to plan for the worst and expect the best. Have contingencies. If we get to here, we have to be able to do this. If we get to there, we have to be able to do that. And then you have to, not only do you make the plan, but then you actually have to execute on the plan to make those changes. And it hurts, and it's tough because you have a number of lives and families that depend upon you. But survival of the entity with the opportunity or the hope to bring them back is the end game goal. Not we're in it till the end and then it's all gone and nothing to come back to.
Yeah.
That's probably not a viable solution, not a very strategic way of thinking.
So you, each time, the biggest thing is you stepped up right away and went, this is what we see. Let's talk about how we're going to get through this, right?
Not every time. I mean, I think you learn, you get better as time goes on. You ask more. I mean, you go back to 2007, 2008, we had 4 different rounds of layoffs. The first round or 2, they weren't really surprising. 3 and 4 hurt. They all hurt. Every night that I knew what was coming the next day or two, they weren't well slept nights, and whatever I had in my stomach didn't stay there. So because you're affecting lives, you never feel good about that. You never feel good about that. My prior company just technically sold, and that's 36 years of tradition, and it's gone. So you have to know who you are, be really clear on what your vision is. And that probably, if there's any lesson I've learned, Ken, it's the fact that you need to be so clear on your vision. Because when vision is clear, and this is probably stolen from Maxwell, but decisions are easy. When vision is clear, decisions are easy. It doesn't make them feel good, but when decision is clear, decisions are easy.
So how do you find peace? Or at what stage do you find peace? Because
you don't. I mean, I wasn't at my previous company when they sold, and I still am not at peace with that. And several of the operational people I'm very connected with, and they're starting to finally find jobs in the mortgage industry. And as we hear in the marketplace today, we see employment at incredibly low rates, but not in the mortgage industry. It's harder if you're in the mortgage industry to find a job today. And so I have a vested interest, because that's my work family, and granted, I don't put my head on the same in the same address they put their head down at night, but some of these people, we've been together for 4 different decades. It matters. I've had a chance to see them before they had kids, have kids. Kids go to college. Kids get married. Pretty invested in their worlds.
So why keep doing it? If you know the mortgage industry is cycle, right? Everybody knows it's cyclical, right?
Yeah.
Do you find that like starting this, going back into that direction, do you find yourself looking around going, I wonder how this ends, or just do what it takes today to be the best Sean McCluskey you can be, and then fight like crazy?
I think it's probably just everybody's wired differently, and for me, it's community. I mean, if you were going to say, hey, the good news is you're the last person left in the world. The bad news is you're the last person left in the world. I couldn't survive by myself. I need people. I need community. I need to be part of something.
Same. Well, it was funny watching you when you technically retired last year. It was funny kind of watching you go, like I knew you weren't retired. Like I knew you were like, yeah, let me, see what I'm going to do. But there's some people when they let go, you're like, oh, we're not going to see that person again. They made the decision, they're going to be gone. With you don't really do that. And I know that about you, that you're like, you need adventure, you need something that you can commit to, and you need people that you can build up. Is that a fair statement?
I just want, as I said, I want to be part of something. The idea that, I didn't grow up on the right side of the tracks, but I have lived a rich life. And if I can help other people get to that same place, that's what motivates me.
All right, let's dive into that, because it's interesting. You fought for everything as a kid, right?
Yeah.
So nothing came easy. You realized I'm going to have to do some scrapping and figure this out.
I don't know that my childhood was a lot different than others. I didn't grow up in a physically abusive house. But by the time I was 16, I was out. I was gone. I had a mom who later in life our relationship got significantly better. But she had some demons, at that point, and I was just trying to be a kid, get through school, and not try to be the parent. And that the path I saw for myself was to get myself out of that situation. So I did that by myself for a minute. I had some other amazing people in my life that helped me later. But I had to make some tougher decisions.
Where does you don't like to talk about your attributes and how good you are, I've noticed. Like, every time I'm like, so how did you do this? You're like, well, that definitely wasn't me. That was everybody else around me. It just so happens that some of the greatest things in the industry you were there for, but you had a huge part to do with it, and you're not. I find that you don't like to be like, yeah, I've done this, and this is, of course, what I did. And you'll always, I was there, but, this person was great. Or I was there, and that person was great. And where's that come from? Is it the focus on everybody else's contributions?
I think about the Hyperion situation, and I happen to work with two of the most intelligent people in the business, and that.
I know them. Yeah, they're great. Yeah.
One was he's just that smart, and the other one was just experiential smart. And my only attribute was I could be the interpreter. Here's what you said, and here's what you said. You said the same thing. You just didn't say it the same way. And they'd look at me and they'd nod, and then somehow they believed it, and then we'd do it. So they weren't my ideas. It was sometimes just my filtering of their ideas that helped us see the direction. And that probably was the role I played at a number of different companies. So I wasn't blessed enough to be the smartest guy in the room. I just had the ability to interpret and communicate.
Which is as valuable as the other two.
Can be. It can be if done right.
Yeah.
And so, and just the realization of where your skill sets are, what your superpowers are, and what your superpowers aren't.
Yeah. I find that with mastery, it's hard to understand that what you do is hard, right? When you master something, it's like, of course, like, why wouldn't you do that? Like, this isn't hard for me at all. we deal with that with our kids all the time, of like our kids are really gifted at something, but it doesn't feel like something valued, necessarily by society. Or let's say talking. Avery, our youngest, is they're all super funny, but like it's hard to have her like see that as super valuable, right? So because it's just easy. Like it's holding a room, and for me, standing on stage is super easy. And so I go, yeah, I sit on stage and talk, but it wasn't as hard as what this other person did, because I don't see what I do as super difficult, but it's because that's just what I do. Like I don't wake up and try to do that, right? You, in working with people and having that vision and plugging that vision in and surrounding yourself with people who are great, but also navigating those relationships to make it all work, that is really hard for a lot of people to do. Yet for you, this is just how you do it.
Yeah, but I also I've had the luxury, the benefit of being connected with some really incredible people. But I know you're laughing, but think about it. So one of your interviews in the last couple of weeks with Bill Hart.
Yeah.
Before that, it was Steve Scanlon.
Yeah. I haven't interviewed Steve yet.
No, but Daniel Harkavy, but some people
yeah.
you know. And so probably one of the key components I learned from Scanlon was master the questions, don't master the answers.
Uh-huh.
And I think that's also part of being great in sales, is that when you get in trouble, ask a question.
Right.
Give yourself a chance to think and be less concerned about what you're saying and be more attuned to what they're saying. The idea that it is coaching, you and I have both been part of the same coaching programs, or at least at some point. And there's a difference between the idea of coaching, that is absolutely them just asking questions, because really the answer is in you, and it's their job to bring the answer out. Mm-hmm. But sometimes I need consulting. Mm-hmm. And so sometimes the question is less coaching, more consulting. Here's what I'm dealing with. What are you hearing from other people? How are they handling this? Give me some actual input. Mm-hmm. And so it's the power to know the difference sometimes, and then to be able to act on that. And that's because of being part of those different organizations. It's the idea that I could actually, EQ for a while was just a foreign concept for me. And I'm not saying I've mastered EQ, I never will, but the idea of emotional intelligence, just to be aware that what I'm feeling is maybe less important than what the other person is feeling. And probably you're feeling that way because either I communicated something in a way that didn't make sense, I gave you a funny look that made you think, what did I say? Mm-hmm. So if I can be more connected with you and listening, if I can be more specific in the way I deliver my information, and then be aware of the way that my body's delivering the information. I listened to Scanlon. This is pretty common for him to say, all right, you guys all having a good time? Yeah. Then tell your face, because your face isn't saying that. Right. So many times our nonverbals don't match what we're saying, and to be aware of that. Mm-hmm. And I think that makes you a better communicator. So when I talked about earlier my strength, it's that ability to be able to communicate with conviction the message that I'm giving, but also the idea of emotional intelligence was to hold two opposing ideas, that my idea is not so compelling, that my idea has to be the idea, that I'd be willing to listen to your idea. Mm-hmm. And then gaining credibility, because you realize that I'm not going to just make you eat or accept the idea I have, but I'm going to take your contribution, and then it's going to become our idea. And I think that's why our group has been successful over the years, which is not the question you asked, but ultimately getting to that place, which is that we're successful because it's been a team activity. It's never been a individual activity.
So why do you think everybody else is successful? Oh, wait, you already answered that 3 times. So okay, I want to dive into that vision thing because I think it's interesting. You gather a lot of information. And I've seen you do this, right? You just gather it all together because you're not going to make a decision with all the information. It's one of the things I admire about you most is you just go, what about this and what about that, and what if this breaks and what if that breaks, and how would this work and how would that work? And you have no problem going, okay, no. Okay, what about this? And like just kind of gathering different things, and then you finally put it all together and go, that idea is going to work. When you're leading, how do you do that? Because you're going to get ideas from everybody, like you just said. Like, it might not be my idea that goes through. It might be this person's idea. You gather it all together. How do you take that and go, this is the way, right? Because at some point, you have to stop gathering information, right? Otherwise, people will think it's still flexible. And I'm trying to figure out this unwavering concept of like, I want to be unwavering in, once we've made a decision, we don't waver on that decision. How do you hold to that? Is it because you did all the research ahead of time that you just know now, or?
I think you play out the different scenarios. You play the what if scenarios. I've never been diagnosed as being on the spectrum, but I know the way I think is not necessarily traditional, right? I see everything in patterns. For me, everything is in patterns. Mm-hmm. I see everything in numbers. And so that left brain dominant side of me usually takes over, and I have to work to be emotional or connected. But that's also what makes sense to me. So, and I said earlier that I need community. And so there's a battle sometimes because that left brain, that logical side wants to take over. Mm-hmm. But that's what helps me formulate that plan. That's what helps me get and see the patterns. And then on paper, I mean, you and I have been part of, the same coaching communities. Mm-hmm. We put it on paper. Mm-hmm. The minute it's on paper, then it becomes, we have clear vision. When vision is clear, decisions are easy. And when everybody can see that, and when the plan is formulated collectively rather than individually, maybe you seed a lot of it, but if the end conclusion is the group's vision, then I think you get the buy-in. Mm-hmm. Yeah, somebody has to put it on paper, and maybe that's me. Probably not me. Probably somebody else in the room is putting that on paper. Mm-hmm. But a lot of the groundwork, a lot of the seeding, I do. Mm-hmm. But I'd like to believe I have the ability to not be so convicted that my way is the only way, allow for that input, and then it becomes a group idea. Mm-hmm.
Okay, one last thing. How do you deal with, you talked about the families that are affected by a layoff, the families that, that count on you, that trust you, and you hate having to turn around and let people go. How do you get up the next day and go, like, all right, like, what's the grieving process for you to where you're like, okay, like, these were the decisions, and now we move forward. What does that window look like?
There's no time to grieve. I mean, my actions the minute after have a direct effect on our ability to bring those people back. Mm-hmm. So if we accept our current reality, have clear metrics in place on how we get those people back, then immediately the idea is, how do we start creating an outcome that results in them being able to come back? Mm-hmm. It's actions. You look at the people today in the marketplace, and so many people believe this is happening to them. It's not happening to them. You've just lost that art of doing the activities you need to do to be successful. Mm-hmm. There are still a number of loan officers that are incredibly busy right now. The majority aren't, mm-hmm. but some of which some of which the company I'm at right now, their numbers are amazing. But they're so committed to the activities. They wake up every day. They know exactly what they're going to do. They have a plan. Mm-hmm. They execute on that plan, and maybe not to the degree and the numbers at which they were. You and I were talking earlier today. This is going to be, since 2009, the third best purchase market since the crash. Mm-hmm. I don't think anybody's thinking in those terms. Mm-hmm. There's opportunity. As long as you have a clear plan, you can not only survive, you can thrive right now. Mm-hmm. But you got to be willing to commit to doing the daily calls, holding regular meetings, doing your follow-up, doing your mortgage reviews. Do the work. Mm-hmm. It does pay. Okay, I'm going to end with the question I've been asking some people lately on this podcast.
You are ready for it? This is a tough one. It's not. I just got my haircut. Here's the question. Failure is not a problem. We all fail, right?
Constantly.
Okay. Oftentimes, failure leads to really amazing things. On the other side of failure is a lot of really good success and excitement. What is your favorite failure? The time that you failed or made the wrong decision that you're like, man, that was the best failure ever.
I don't even know if it's work related. There's been so many. Pick one. I wouldn't even know where to begin. There've been we're talking about the successes, but there have been so many failures in between the successes, and that's what you hope you learn from. There's been, what? This isn't a failure, but probably the place that I lean back on the most is, so like you said, we've known each other for a long time, but we didn't probably spend the quantity of time we spend together and that we do in the last 10 years before that, but we knew each other professionally. I think for me, I was always 1 year, 5 year, 10 years. I was always living ahead of the day I was in. And in June of 2004, I was in a nasty accident, I guess, because I don't remember. That's what I was told. And having to learn or relearn how to walk and how to talk and how to put sentences together and be able to make it through a day, I realized that probably my mistake was not living in the day, not living in the moment. And so I am far better today. I don't know if I'm better equipped, but I am more aware that I'm just going to let tomorrow be tomorrow. I'm going to think about it, but I'm going to enjoy right now, this moment. I'm enjoying this moment. This is fun. We've been talking about this for maybe a couple months that we're going to do this, but here we are finally. Rebecca gave me enough grace to finally work with my schedule. It's pretty busy for a guy that wasn't working. But,
Right.
I mean, I think my failure was just not living in the day. So focused on tomorrow.
I love that you said that because Patrick Palmer went there too, and looking at how he got through '08 is just you wake up and you go, right now I'm okay. Like I know tomorrow's gonna suck, but let's just live today, which I love that. And I've been taking that away. Like this podcast has been so fun because I've gotten to take all these tips for myself. So I'm basically selfishly just getting all the advice from the best people I know. So, dude, thanks for coming, and I appreciate you.
Thanks, man.